Good morning, good afternoon, good evening, FF family. Today is Tuesday, November 11th. This is episode 33. All about stocks, and more stocks. As always, I'm your host today. My name is Dylan. I am here with Bradley and Nick, and we're here to bring this together. Gentlemen, I want to talk about something today. I was piquing my interest on here. I had some thoughts of my own. I wondered about running a business. And during that time, I thought, what would be something I open up? What would something that Dylan would be really interested in doing? I'll save mine for the end. So my question for you all, just to clarify, if you were to open a business, your dream doesn't matter, profitable or not, just think it's going to work out and legal. What business would you open up? Nick, you can go first.
So I've always said this, and if for those of you who don't know, I'm a dog guy. My dream business would just be some sort of I just want to roll around with puppies all day, but I don't think that's a business. So maybe like a dog shelter or grooming, babysitting type thing with just dog food and supplies and things. So just all things dog related. So I could roll around with puppies all day. That would be my dream business.
So you want to roll around with dogs?
Yes, 100%. No question.
I mean, that's fair. That's a weird profit margin. Bradley, what do you think?
Nick, it's so funny that you say that because sometimes, I don't know how much you and I are actually alike. And I've actually told Dylan this before. In a dream world of mine, I would have a huge animal rescue. There's something called Best Friends Society that Carrie and I went to in Utah, and it's like this, I don't know how many acres, 100, 200, 1,000 acres of land, and you can drive through, and I don't really love cats, but the first place you go to, they had a room of cats, and they rescue animals, wild animals and stuff like that. And it's called Best Friends Animal Society, and we have a sweater that says Save Them All, because I really love dogs. I like animals, but mostly dogs. So that's funny that you say that, and I've told Dylan this before. I'm like, I want a lot of money so that way I can do that and not have to worry about profit. And so I guess we might as well add that to the list, of things we're working on.
I agree.
Because, as a business owner of two businesses myself, that's one thing that's down there on the list. I would say outside of that, I mean, I've always wanted to do the stuff we're doing. So business owner, I've wanted to own something where I contribute and help people and or entertain people, whether it's write or talk about entertainment. And I'm doing both of those things. So not necessarily making money like you said, Dylan, but hopefully one day. So that's my answer.
Fantastic.
I like it.
So mine would be opening up a card shop. I've talked with Bradley about it before, and from the idea of just something successful through there where you can have that community, you can have a group of people come through, whether it be any trading cards you can think of. I also thought about expanding as well with video games, physical media, reselling as well. All of that together sounds really, really fun to me. And I've always wanted that. And that'd be something that I would look into. And I think I could be pretty good at it through a lot of my passion and stuff I know. And I have a couple gentlemen here that would help with some business decisions. I don't know if rolling around with puppies would be profitable, but I promise they know it would be fun.
Yeah.
Yeah. So I agree with that. Well, gentlemen, appreciate you for sticking around for that piece to get us started on here. We're going to talk about the stock market as mentioned before. I'm going to go on to a few topics on here. So the stock market in general, we've seen a lot of lows earlier this year. We survived the great stock market collapse depression of 2025 earlier. So we didn't panic, didn't sell anything, turned out great. My question to you all on this, and we can start with Nick, it's hitting new record highs almost every single day. And right now the S&P is trading around a little over 6,500. I think 6,850 is the last thing we had. And it's, once again, at near or record highs. Is there any major correction around the corner? Do we feel like we should be panicking? What's our thoughts? Nick?
Yeah, so that's a good question. I think that I am naturally a pessimist when it comes to the market, and so I'm always going to lean more towards like a correction is coming. I think a couple things that I would call out is I've talked about the fear and greed index. It was just last week at a 21, and as a reminder, it's a 0 to 100 scale. But 21 is extreme fear. So market sentiment, like people are afraid. You got the government shutdown going on. You've got, unknowns with tariffs and stuff like that. There's a lot of just fear going on. And when people are afraid, they want to conserve, they want to save, they want to sell and like have the guaranteed funds and stuff like that. Since it has gone up to 31, which is still in the very big like fear section, but it's not as bad as it was a week ago.
Right.
And so I think that there's a lot of things going on. And I can't remember who said it, but like, I think there's a lot of tinder going on, and there's just like one thing that can be the match that lights it all up. So I don't know what that one thing is, but I think any sort of news could cause people to panic. Now, I think it might be short term. I don't know that there's going to be like a long term crash or anything, but I do think that if something were to happen right now, if a war was announced or like something went bankrupt, like a big, lots of companies, like something would cause it to just erupt, and there'd be huge correction, I think. I just don't know what that is.
I think I know. I think I know what it is, and I'm being serious. First of all, it's funny how different we are, because I'm like, nothing's gonna happen. We're fine, if it does.
If Bradley says we're dying and it's crashing, be afraid, because it takes a lot for him to actually panic here.
But if it does, it's going to be AI, or AI stocks, right? Like NVIDIA, for example, like they're selling all these processing units or cards or chips or whatever for AI. I still am not bought into I'm not bought into the idea of AI that it's all that useful to like make money. Yeah, right. Like, okay, Tesla uses AI, but they have their own proprietary stuff. Like they're a software company, right? So they're fine on their own, right? And that's the only real place that I see AI actually doing anything for us, right? Self-driving cars, Tesla, like they're blossoming really well, but they have their own thing going on. But I really don't see how much has ChatGPT or whatever, Perplexity, Microsoft Copilot, how much has it actually contributed? Like, outside of writing people's papers, like it's not doing anything for anyone.
Did you hear about the short position on NVIDIA?
Yeah, that's what made me think of this specific topic. Honestly, I was thinking about that.
What if you remember The Big Short, right? Like it was a long process. So what do you think pops the bubble? Because I mean, a couple earnings under expectations, I don't think gets us anywhere. Because it's like, hey, give it more time. It's the future. So what pops the bubble with AI?
I think it's I think of more like the .com bubble than the bubble of 2007 with mortgages, because those were just really bad, risky bets where no one was paying their bills. I think what happened was a couple places stopped, like no one was getting profit. The difference is these were new businesses, right? Like pets.com or like the grocery delivery places. No one was getting profit. And all of a sudden people are like, we're not funding these places anymore. And then the stock slowly started to go, and it tipped like that Kinder. For me, I think like at what point is NVIDIA going to have all these, like, I don't know. I actually don't know what NVIDIA's profits are, but at what point is it going to be where it's like, what are we getting out of this? How are we making money? Because you can only make money in the stock market so much before it's like, I need income, not just the storage of wealth. So what is it going to be? I think it's going to be profits. Like, going back to Tesla, this year for Tesla sucked for profits, right? And then they gave that $1 trillion package with the contingent that Elon Musk has to make money. He can't just, have these awesome ideas.
Don't they always suck with profits though?
Well, 2024 was pretty good in at least sales. I guess sales maybe. Okay. But no one's buying anything right now. So eventually it's like either you buy stuff and make profits. You can't just only have the stock market.
So here's my thought, because NVIDIA, actually, I was just looking it up, has increase revenue by 56% from last year.
Okay.
So they're making money, but is it other companies that maybe are buying their stuff
Yes.
anticipating AI?
Yeah, I guess it's that next level. Like, at what point is whomever's buying from Nvidia? At what point is that company like, well, we need to make money off of these chips, right? So like they stop buying Nvidia, Nvidia stops having good sales and good profits. And then the stock market goes down. I think it'll be something like that.
But if I'm buying a chip from Nvidia and AI doesn't work, I still have a chip that has value and can do other computing stuff. So does that necessarily mean that there's going to be a bubble?
I guess the
If AI
question
not
is,
useful?
do you keep upgrading, right? Like chips, like if you look at Nvidia, like their graphics processing units, they're always like 6 months from now they'll be like, this is 14 times faster than the model you bought yesterday, and it's
Yeah.
that quick that it turns around.
That's true.
So does that mean like Nvidia, or it really, I guess, because we kind of brought up with AI, do these ultimately control the projected stock market correction we're worried about? So like, do these ultimately like hold the keys to this? Do we feel?
I don't think so. I think they're just the supplier, right? And it's like they're
Yeah.
selling this thing that everybody is like, "Ooh, I need to buy that because it's going to make me a lot of money." And then they're kind of the last one holding the bag, and it's like, "Well, I spent all this money, I invested all of it, and got no return. Now I'm missing earnings, and maybe that causes." I don't think it's a bubble though, because it happens very quickly. I think this is a long term. Companies start to go under if they don't adapt and stuff like that. But
Well,
It
if
does feel like
companies
kind
start
of
going
the
under, then the stock will go under. That's
yeah.
what I'm saying. Is like everything's kind of leading to Nvidia or like other processing units because they help companies like fund their AI or like give them the processing power for their AI. But if this AI doesn't produce anything, then they're going to go back to their old model or whatever. Then this level stops, then this level stops. That's my
yeah,
theory. So Dylan, my answer is yes. Nick's answer is no. He doesn't think so.
I mean, it reminds me of it's not a scam per se this
Uh-huh.
time around, but it kind of reminds me of like NFTs, where every corporation was trying to incorporate some
Sure.
level of NFTs into everything. First one that comes to mind is like Square Enix. They were like making Cloud or Sephiroth NFTs was their game plan, and then their CEO, I never came to fruition. Their CEO resigned, so that was funny.
Huh.
So I don't think it's like that level, but it definitely feels like this fad that's happening more so now. I'm actually on the line. I kind of agree with Nick. I don't think so
Yeah.
as of now of how it
I
looks.
just I just think chips have more, like with NFTs there was no usefulness to it, right? And so
Yeah.
it was a money grab.
Yeah.
With
Right.
with processors, there's computing power, there's things that you can use it for. Even if you can't use it for AI, I can still integrate that into my business. I still need
But
it,
that's
I
the
guess.
whole thing. Are these businesses like think of Facebook or Meta, right? Like they put hundreds of billions of dollars into what was it called? Metaverse or whatever?
Oh,
Yep.
the virtual land stuff?
Yeah. Like
Yeah.
eventually that has to make money, you know?
Is that
It
still a thing?
I
does.
think they canceled it.
Yeah, it's like it's they yes and no. It's like part of Meta.
The
It's basically
metaverse or
no.
whatever.
Yeah, basically no. But yes, if they want to, but basically no.
So, I mean, I guess my point is like the correction, if there is one, is everyone going back to like reality and saying AI is not going to make our profits blossom and boom, and we're going to go back. And then guess what happens? All these people they hired to develop these new AI things, they're going to be like, well, we can't pay you, or we need to trim some of this. Like people are going to get
Where
laid
where
off.
do you see AI being able to create money for businesses?
I don't. That's my point. Is I don't know.
Okay.
I have no idea what they're thinking. Now I'm sure they have their own plans, but people are spending hundreds of billions or trillions of dollars on AI or chips for AI, and I don't know what it's gonna do. What do you think? What do you think it's gonna do?
I think you are able to take customer service and like chat support type stuff
Uh
and you
huh.
make it all AI. And you could decrease costs of
Sure.
like your labor and stuff like that. And I think you can take AI and reduce like accounting type roles. I think there's like things that can be automated through AI. And you can get your cost savings by reduction of labor. I don't think it generates new income for you, but I do think you can optimize processes, be leaner, less people, and
Yeah.
just
I
have
guess
a
I
have a
guess my
subscription
question
for AI.
is that worth trillions?
Billions.
Oh, and the overall market, I mean, I don't know. It'd have to be a pretty big
Right.
drop, I guess. Maybe if you're doing that much business, you know.
Maybe. I
Um,
mean, I know we
yeah,
all come from T-Mobile at one point in our lives and like customer service was everything. But I mean, like Google doesn't have customer service really anymore. You know, they phased that out a while ago. Like try to call Google customer service. You can't, you know. Like that
sure.
you could get to the point where it's like, well, whatever. And no one ever notices, you know.
Yeah, if your product's good enough, you don't need it, right? Like, I think isn't that how Google gets away with it?
Yeah, I guess. Yeah, but I can tell you there's
I mean, when you
times
run the monopoly on it, right? So
sure.
Yeah. What are your other options? Go to Yahoo? No, I'm just
I'll bing it.
kidding.
where's Jeeves when you need him?
Oh,
my
gosh.
Oh boy.
That's my
Yeah,
point.
that's
Is
a
like
throwback.
I'm not saying there will be a crash or there will be an AI crash, but if there was one, I could see it
That's what we
like
call it.
it would make sense to me.
And I think it's going to be a tariff announcement or something.
Well,
Oh, whoa,
we already
trigger,
know
trigger,
that.
trigger.
Yeah,
Don't
sorry.
say that. Like
Oh, you can't say
stock
the
market
Q word.
futures are probably down already.
Man,
Right.
that's actually been the whole impact the whole time is FF, is really talking
Yeah.
about tariffs again. Oh, here we go.
Yeah.
It's
Oh, they
Tuesday
came
again.
Uh,
So yeah, I know. Speaking of like other opportunities with stocks, Nick, you had brought up earlier. You were talking about Box,
Yeah.
BOXX. What was
Tell
that
us
about?
about that.
yeah, so it's super cool. I think I've shared this, but I actually liquidated a lot of my assets and I'm holding cash reserves or cash equivalent, I think SPACs was one of them, just like T-bills and stuff like that. But I found out when you have that and you get paid monthly dividends, you're getting taxed on that at the end of the year. So if I make $1,000 in dividends, I will be taxed at whatever income bracket that I'm at for the year. And so, like, while I'm working and trying to save up and use that for retirement, it doesn't make a whole lot of sense to like pay taxes. And
Hmm.
so, I wanted to find something that basically allowed me to get that same guaranteed income. I think I make like 4%, which isn't anything great, but like
Right.
it's conservative, it's guaranteed. But I didn't want to pay taxes on it because if you stop working and you make less than 95,000 and some change, I think, married, you pay zero capital gains tax. And so I found this ETF based, or not really an ETF, but it's called BOXX, and it basically invests in 1 to 3 month like treasury bills, and so it's got a very consistent just upward trend. It very
Right.
rarely can go down, even if like rates drop and stuff like that. It just reduces future earnings.
Yeah.
They've paid out a dividend once, which was kind of controversial because the whole point is they don't pay out dividends, so you don't get taxed. But essentially, if you just invested in that and then cashed out when you have no income, you could essentially pay zero taxes on
So
that earning.
what? Okay. So I'm looking at it right now.
Yes.
BOXX. So you're saying there's no dividend at all. It's just the earnings is like your equivalent of dividends, essentially.
Yeah, so imagine that they're still getting those same dividends that you would get, but they're just making the value of the asset go up instead of paying it out. And so you're still getting the same amount of money, just the way that it's designated, you don't pay taxes on it until you sell the asset.
Yeah.
Instead of their dividends, you get taxed as soon as it gets paid out. So this way you can hold it and sell it when it's advantage to you with your tax situation versus just having to pay taxes all the way through
Right.
retirement. So it's if you're going to be looking at some sort of like people, what's the recommended cash reserves for retirement? Like 10%, maybe,
Yeah.
depending
Something
on your
like
age,
that.
10 to
Yeah,
20%.
rather
Yeah.
than
If you're going to have that and hold a cash position for 10 years or longer, it makes more sense if it's in a individual account that's not tax sheltered to do it in a fund like Box. That way, when you go to retire, you have better tax treatment. So I've just been looking for the most like guaranteed way to get income and have the best tax advantages. And I
Yeah.
think Box is definitely worth looking into because it allows you to defer taxes when you want versus just the entire time you hold the asset.
So I have two questions. One is it's new, right? It's been around for almost 3 years. Does that concern you?
It yes and no. I think if you look at it, it started at $100
Right.
and it's at like 114 and some change, but it's not like an up and down.
Right.
The spread throughout the day is pennies. It's like 1 to 2 cents spread
Yeah.
per day.
Yeah.
And it just like it's not like a VU or anything that like tracks the market or something. It's done in a way that you basically just get whatever the interest rate is as an extra value. So I think it's gone up by about like 4% every year.
Yeah, that's what it looks like,
On
right
average.
around close to 5.
Yeah, which is matched about what your SPACs would pay out in like a cash core position or something like that.
Yeah.
So it's
So
really
we're-
just a tax haven to be able to pay the types of taxes you want.
That I was going to say tax haven. Yeah.
Okay, so essentially this is like a risk-free 4.5% a year, right? For me.
I don't know that you can say anything's like 100% risk free, but it's as risk free as say a treasury bill or maybe a CD or a SPACs
Yeah.
account. It's just the way the dividends are paid out. It's appreciation in the asset versus a payout in dividends.
How did you find this?
Uh, that useless AI we were talking about, I asked it to find me a fund because I didn't want to pay taxes on dividends I kept getting paid out. So I was like,
Yeah.
how can I do? I was like, surely this exists, or maybe I should make it.
Right.
And then doing some research, I was like, hey, it does exist, and it does exactly what I wanted it to. So I actually moved probably like 50% of my cash position to that like a couple weeks ago, and it has like every day I'm making like 0.2% or something like
Right,
that. Like
right.
it's very consistent every single day. Fluctuates very little, just keeps going up.
Okay, so here's my thought is like you said this is a good thing for like older people who are
positions.
ready for retirement.
I don't know about ready for retirement. I'd say for this to make sense, you probably need to be about 10 years out.
Okay.
Because anything less than that, and you're not really getting like the advantage is you're not paying taxes on your cash portion. And so if your cash portion is only 10%, 20%, and you're about to retire, you're probably not paying a ton of taxes on that anyways. This is more of like cumulative over the years because you're earning 4% and it's
Yeah.
just taxes you would pay on the 4%. So
Why-
it's not a
okay.
ton, but
So I think like okay, so at least 10 years. Why not just put it into VOO? Because that's going to go up and down, but you have 10 years anyways,
yeah. So I think your majority of your investment is going to be a stock market type or ETF or something like VU. I think that if you're going to maintain a cash position that's very able to be liquidated and things like that, instead of just saying like, hey, it's in cash or even in SPACs, you could put it in Box. And so it's not saying go and invest in this. It's saying if you have a cash core position, this may be a better option for you to hold if it's a long term because of the tax implications.
I've got a question. This so, first of all, we'll probably need explanation. But this says, I know with not it doesn't have a dividend, right? Like that's the point of it. So is there a capital gains tax with this at all?
So you only get capital gains when you sell, and so the idea is you retire, right? So you stop working, you stop getting income, and now I sell. And capital gains tax rates are different. You get 0% if you're under 95,000 filing jointly. It's like 15% anything above that, and then it maxes out, I think, at like 22%, I think. But it's tiered basically, where income tax isn't like that, but capital gains tax, you have a shelter anything under 95,000. So save that, cash it out,
Yeah.
get your capital gains hit, but hey, you're under that threshold, you owe nothing on it.
And just for the people at home, the capital gains tax is just when you sell. That's the only time you
Yeah.
get taxed on that.
Or when you get your dividends and stuff,
Right, that's an
you'll get taxed
immediate
on those. So,
report.
so this defers that, is the whole idea. It's
Okay.
really quite genius if you think about it. I loved it.
I guess okay. So you're saying I guess I don't know where this fits in my portfolio. What range of person am I in? Like, am I in my 40s or 50s or like 30s?
So it doesn't really matter, um, because whatever, it's not should I get this. It's really just what is your percentage of your cash reserves in your investments.
Right.
And if you're younger, it's going to be lower, right?
Okay.
I think 10% is usually recommended. As you get older, you probably increase that a little bit. I don't think anybody ever recommends more than like maybe 20 or 30% cash reserves on an investment, regardless of age. But if you whatever that amount is, you have to choose between, what is it, F cash,
Yeah.
SPACs, like,
SPAX.
yeah, like whatever that thing is, this may be the better option because you're getting the same return as like a SPACs. You're just able to defer the taxes. So whatever you have in a SPACs or F cash, this could be a better alternative, is really what it would boil down to.
But to get the tax savings, I have to hold it long term for long term capital gains, right?
You have to hold it for over a year, so you definitely can't be retiring within a year, and
Yeah.
for that to work. So it has to go from short to long term,
Right.
capital gains tax.
So, okay. I'm trying to make this fit. So, if I have like you right now, what percentage of your portfolio is cash?
So right now, I'm probably sitting like 85 to 90% cash.
Gosh,
I'm not
Nick.
saying that's like recommended. I am pessimistic. I think there's a correction
Come
coming,
on,
and
Nick.
I want to be able to buy stuff on sale. And so, yes, I did miss out on a lot of gains over the last like 2 or 3 months. I'll admit that, but we'll see. I was right on the last correction, and I was able to make some good money on that, and so that's what I'm betting on.
Okay.
Just like Bitcoin, right?
Yeah. The vibes feel off on the market. You know what I mean?
That's true.
Gosh. Okay.
I got some gold you want to buy into if you want.
See?
Okay, so you have 85%. How much are you going to put in this? Let's assume you don't have 85%. Let's say you have 10% and we're all in like our mid 30s. I have 10% of my cash or of my investments are cash.
Yeah, I do all 10%.
But I think the idea with cash is like if I need it, I pull it out, right?
Well, yes, and this. I mean, it's very liquid. So if you look at the ability to sell and then withdraw, it's basically an extra step. You know what I mean?
Yeah.
So
Sure.
especially if you're only at 10% holdings, your liquidity is not an issue there. So it's the same as cash because you're not going to see the drastic drops or anything like that. You're never going to. You're really not going to lose principal at any given time.
Well, it's not the liquidity that's a problem, but it's just the clashing idea that I hold my cash just because I need it to be liquid. But you're saying put this in there for a long term, for a year, to avoid capital gains. But if it's cash, that's stuff that I need to pull in and out potentially, and that kind of ruins that strategy. You know what I mean? Like, what am I missing?
Yeah. I guess like if you're I don't know that if I'm sitting on 10% cash reserves for the most part, and there's a buying opportunity, which I would imagine that's what you're kind of talking about, then I would just sell out of my box position and purchase whatever I wanted to. And then I wouldn't have a 10% cash. I'd have a 0%. And then it would be, it is a moot point because I'm not investing in anything cash for my core position.
Yeah.
This is just for that extra money that you leave sitting there for a rainy day. Some people I would say would never touch it in 10 years. They just leave it there just in case or whatever, because it's just a diversified portfolio.
Gotcha.
And I want my guaranteed 4% that I get on my cash or whatever the current interest rate is.
Yeah.
Cool. Okay. I'm going to get that 4%, but I'm never going to pay taxes on it if I utilize this box strategy. So.
Yeah. Dylan, are you sold?
I don't know. No, he lost me an hour ago. But I'm gonna be honest, Nick. I'm sorry.
I follow, but like I just like I'm close.
Let me be clear. I understand what he's saying
Right.
too. I'm saying he lost me in the sale.
Gotcha. Okay.
Yeah.
Fair.
Random thought, and maybe it's because of FF Media. Did you guys ever watch Nothing to Lose?
Nothing to lose.
Tim
no?
Robbins and Martin Lawrence from the 90s.
From like 20 years ago.
Yeah, from the 90s.
Yes, I have. Yeah.
Great comedy, right?
Uh-huh.
It's just you guys said diversify, and Tim Robbins like he has this epiphany of like how to steal from his boss, and he just randomly looks over to Martin Lawrence and goes diversify, and I know I just thought of that. That was it. So random movie quote. You guys know how it is. We talk about it all the time. Yeah,
Yeah.
just think about something random. All right, cool. Well, I appreciate that. So for me, my portfolio, in case anybody's wondering, is not looking that great these days. A lot of stock individuals been dropping.
That's because you
should
have, how much money do you have in MO?
Oh yeah, good point. A lot. That has dropped like almost $10, right?
Dylan, that's what.
What? What? It's still
happened to
it's back
MO?
on the
Why'd
right.
they just fall off a cliff?
It's I don't know. I honestly don't know. It started with the trend of like everything dropping over the past couple weeks and like coming back, right? And it's on the rise again. Like
Well,
don't get me
when
wrong.
did you buy MO?
Ooh, good question. I would have to look it up, but I think about 6 months ago.
Yeah.
Oh, so you're not actually down because it spiked up, but then it just kind of went back down to normal. You're still
It
probably
did go
up
down a
overall,
little
right?
bit from when it was like at like 59, 60, 61, and then it spiked up to like 68. Now it's down to 58.
I bet you're at worst broke even on it right now, right?
I'm double checking right now actually, but I think currently as I've seen, I'm not like because it's I mostly got it for the dividend
Right.
on it
Right.
overall.
Yeah.
And that's
Oh,
been
so
great.
you're up, including the dividend.
Yes. But you know, if you're trying
It's
to
a quarterly dividend, so maybe
Yeah.
you got
probably
what?
got what, two of them.
Yeah, up to 2.
So Nick, MO is a cigarette company, and
Yep.
so what I did was I actually looked at it, and I started. It was in December of last year, so I'm almost at a year. is what
Okay.
it was. So right now I'm up. I think it's like 13% on it, with a little, almost like $200 gain just in the stock minus like the dividend.
Gotcha.
Yeah, it's been pretty good. It's just man, it was a rough month for sure.
Yeah.
Where it was, but funny enough, I also have that tied into my what did I make that into? What was it called? Geez, hang on. It's my rollover IRA.
Gotcha.
And it's because of how much I have from my 401k from T-Mobile built into that. The dividends are crazy with that.
Yeah.
Just how much I'm able to input, it's pretty amazing actually.
Well, they paid like a 7% dividend yield.
It's huge. It's
yes, they do. You are right.
So what's your?
I
Are
love
you
it.
like a long on this, or what's your goals? Are you going to
Yeah.
sell it if it gets to a certain price, or are you just holding?
I have a notification to sell at 70, not to auto do it, but I always put these with all of the ones I have, which like a crazy amount. So I go in with everything with the intention of long hold. I don't do shorts. I
That's my
used
boy.
to. Yeah, I used to. It was fun. I never lost a lot, unlike some people on this call. But like, but I never go with that intention. That being said, if it's gonna say something bad, if the stock is gonna go up to 70 from my point now, that's a huge increase, and I feel like it'd just be silly not to like sell at that point because of how long I've had into it, and then just put it back, not the whole amount, but like go back to where I started and just let the dividend increase again.
So I'm
Or
curious
just
because
put
I
in
love
something else.
the psychology of trading, and so I've got to ask: when it jumped up to $67 and some change, did you consider selling at that point?
It did.
Yeah, it
I
did.
never
And
knew.
On August 22nd, it
I
went
never
to
knew. It
67.
didn't hit 70. Didn't hit 70. I don't care. I would set and leave it.
So you don't even look at it unless you get your notification, is what you're saying.
No, I'm doing long hold. I don't care.
Okay.
That's not the
So
point of it.
I have even more into MO.
Is
And-
everybody buying MO but me?
I got
What's
him
going
into
on
it.
here?
Well, we were on a call. Dylan and I were on a call together, and we were talking about dividends. And Dylan's like, "What about MO?" And I was like, "Wow, their dividend is huge." So I'd probably put maybe 5% in there. And I'm like, okay, I have of my okay, it's a lot. I have a lot of my portfolio in there. Um, I'm almost
What
embarrassed to say
percentage
it's like 25%.
Oh
Um,
my God, mine's
in
not
MO?
that much.
yes.
Holy shit!
So okay, let me answer.
When did you enter?
I had like 5-ish, maybe 2 to 5% in a year ago, and then I had a bunch of like little stuff that was tied up into other things that like I had held on to years ago that really wasn't doing anything. It was mostly like like meme stuff that like I didn't really learn about 5+ years ago until recently. Sold all of that and then put it into MO. So, okay, let me answer two things. It is a long for me. My goal, I don't care what the stock price is. Like Dylan just said, 40, 50, 70. I mean, in a sense, I care because that's what part of the dividend
The
payout.
dividend pays off.
Right. But it like the idea is it's that percentage that I want. So my goal is like 5 to 10 years. The only way I would pull out is if they're like we're dropping our dividends, like
Yes.
a significant amount. And to answer your second question, Nick, when it was at 68 and I was up like a lot of thousands of dollars, yes, it was very tempting to pull it out, especially when I had like 25% of my portfolio in there. But I was like, long game, long game, long game. It's about the dividends for me. So the only way I'm pulling out is if I hit that 5, 10 year mark, I'll reevaluate, or if they drop their dividends.
So why not look at other stocks? There's other stocks that pay higher dividends than that. Why MO?
I mean, I probably have some of those stocks.
Right.
It was just like a calculation I did at the time that I'm like this scene like I looked at the dividend payout rate. They looked good and I felt comfortable with it and I was like I need to it was kind of a mentality thing. Like I need to make a decision and I made that decision, you know? It's like I could keep like over analyzing, over calculating and I could probably do better. But I knew if I did this based on their previous payout rates, right? This is all assuming they continue to pay out the right dividends. I'm gonna win, you know. So that kind of answers that question. It's like I had to make a decision.
And mine came in. Do you remember I was talking about like that Geo prison stock? It was
I do.
around that time where I was talking about like, okay, nothing's going anywhere with this stock. I gained a little off of it for sure.
Yeah,
But like it was just not going anywhere. That's when I transitioned to MO. We were starting the podcast and we were talking about how we gained. Um, just by doing dividends. I think it was your article on the website
yeah,
where it's like, that's like the real passive income. That's what I was seeing. And like that combo, that's where I do it. It's like, oh, Bradley, this thing's kind of crazy. It's like whatever percent it was at that point. And I was like, I'm doing this. You should look into it too. And then I didn't
yeah.
realize he did all of that. But I
Well,
did a big chunk too, to be fair.
my chunk is obviously tens of thousands of dollars, and my risk comes with the high percentage, like the low diversity. Dylan, I think it was last episode or the episode before, and you're like, "Hey, name a mistake you've made recently," and I was like, "I may have under diversified a little bit." It was MO, just to get you some insight
Yeah.
into my answer. That was
Yeah.
it. But the idea, as long as they could go out of business or drop their dividend, then I'm screwed. As long as that doesn't happen,
Does it not worry you that like the trend with cigarettes and stuff is going down over time?
no, because I do
No.
think that there is a market for nicotine and tobacco.
Yeah.
I do think that it's not going to go away, right? Like, okay, hear me out for 2 seconds. The history of humanity is we have found ways to get pleasure in physical or mental highs for thousands of years. It's not going away, you know? Like maybe it will change, but as humans, we get drunk, we get high, you know, and nicotine and tobacco that gets you there essentially. And they'll figure it out. That's my idea. That it's not long term, but it's long. It's a 5-year plan.
Okay, that's fair.
I so like for me as well, like with that, it's not, yes, it's a cigarette company, but it's specifically like what Bradley talked about. It's like it's the nicotine, like they can do like chews or
The
like
Zyn.
with Zyn. I was just about to say
Yeah.
Zyn was one, or they can even diversify into like any smoke shops, like whatever that ends up being. It's, yes, a cigarette company, but also cigarettes have been around since like I don't know, the 1990s at least. So
Well,
it's
if you
not
look
going.
at
It's right around the
So it's not
90s.
going anywhere.
from
Yeah,
the 60s to like 22, it's gone from like 46% of the population to like 11% of the population. So like smoking habits with newer generations and health conscious people are definitely trending down significantly. But I
yeah.
guess, like vaping has probably gone up, right?
Right,
Like
right.
other
Yes.
things like that. So that's
But
fair.
Nick, you're missing a key point with the stock. The vibes are up.
The vibes are up.
Vapes are in, baby. You know what I mean?
Oh,
So we're in it.
Listen,
Um,
I like you might be right in one way or another, but people will find a way to get a physical high, and then on the other side, businesses will find a way to profit off that. In the
that's fair.
meantime, I'm gonna find a way to profit off of both those things. So, you know.
I like your theory.
I think like the literal thought process I had with Bradley, like when I was showing him that, I was buying into it, and oh yeah, I remember this. I was in the buy section for it on Fidelity, and I went, okay, Bradley, I could never do this as I put 1000000, like trying to buy like $10,000 worth of stock in it, and I was like, I could never do that as I just keep putting more zeros in. I have standards and morals, and I just
Yeah.
bought it.
Yeah.
So,
But
but I mean,
but here's the thing: if you could, you would.
what?
Like,
Smoke?
if you could make $1 billion off of it, you would.
Oh yeah. I mean, I'm not high roading anything. I have the stock in for over a year. What do you mean? I'm not.
Yeah.
I'm not. Let me be very clear. That's a joke. I've already sold my soul to the devil at this point. You know what I mean? Like it's
Oh my-
done.
So I guess you're right, Nick. It doesn't matter. Like, does it matter? Like, if you're gonna have a high dividend company, you're probably getting a risk somehow, right? Like, high returns equals high risk. So, sure, the risk is that I'm under diversified and it's on tobacco and nicotine, but what about anything else that's at that or better? The risk is just as high, is it not?
Yeah, I look at the trends and I feel like it's maybe heightened risk than some other investment options.
Sure. But what are they? Like, I don't know. Like, I can't think of it. I don't know if you know any off the top of your head. But
Well, you remember good old AGNC, right?
oh, yeah, I do. And yeah.
They were like what at 10%. What is Ford at? Isn't Ford kind of up there a little bit in dividend?
Yeah,
You're a Ford
they
investor, right?
they are, and Coke. Coke is one.
Coke,
Coke is probably
none
half
of these
of
are as
ammo.
high. Let's be clear.
Yeah,
None of
yeah.
these are close to where
But there's still
dividend.
the aristocrat, or what is it? Am I missing that term up?
Yeah.
Yeah, is MO a dividend aristocrat?
I think
100%.
I think they are. Yeah.
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 AGNC's at 14%, but their stock price is really low. So you really, that low
You
stock
gotta buy
price
in now.
really
What is a low stock like? It's gone down or
their-
it's just
no, like
trades at
their stock price is $10 versus 60. So I guess the thing
why
that's
would that matter?
the thing that scares me is like the math with that. Like, if I put more money, I've seen AGNC move, I don't know, like from $10 to $6. I don't know the exact amount. Like, I feel like in the last few years they've moved from like $10 to $12 to $6 to $5, and that 14%, they're not a dividend aristocrat, are they? There's no way.
I don't think so, but they definitely pay out a pretty good dividend.
Yeah,
I know
14% is high. It's very high. And let me be clear, I do have a couple grand in AGNC.
Still?
Okay.
Yes, I do. And I don't even look at the price. I just, I use it for dividends.
They've paid out 12 cents a share every, what is it? Are they monthly?
Let's see.
Oh yeah, it's a monthly dividend, ain't it?
Yeah, I'm getting money from them, but
They,
I cannot
Why are you worried about this then? I'm confused.
I can't
it
build
seems
a
like a decent.
I can't build a
Yeah.
5 to 10 year plan off of AGNC.
Oh,
Is
I
what I'm
know what it
saying.
is. No one's allowed to know about this. Right, Bradley, I get you. Yeah, this is real bad. Don't get into this and inflate the stock for no reason. Yeah, no. Okay. I see you.
So
But
that's why, like and if they're not a well established dividend either. But they were on there. I remember looking through the sheets of like dividend payouts for the last year, and I'm pretty sure their dividends go like this too.
yeah,
Like they go up and down, and MO's pretty solid. And I know if MO moves, something's going on, right? Like I know it's time to pull out. I'll take my dividends, and I'm good. So I've already made a lot of cash on dividends, so it doesn't really matter what happened with the stock. But that's why, like, it's not a perfect mentality. I had to put some risk
sure.
and offset that risk with dividends somewhere.
I feel like I'm buying AG&C soon.
I don't, I feel like I couldn't recommend buying AGNC.
We
Right.
got a love hate relationship with that one.
Yeah, yeah. Yeah, they
Do
were a
we
bit of a
though?
meme stock.
Okay.
I think that's also part of what I took out and put into MO also.
Hmm, okay.
So, Nick, my question is, okay, so I don't know, I'm thinking like, I have the BOXX, which is 4%. If I hold it for a
Yeah.
year, no capital gains. Why wouldn't I, like, I don't know, why wouldn't I go with like a dividend stock that pays 7 plus the stock could go up a little bit instead?
Oh no, you totally should.
Yeah.
I think if you're, and again, I mentioned the psychology of trading, right?
Yeah.
If you see your investment dip 10, 15, 20%, are you going to panic and sell? Like your cash
Okay.
position's not going to do that, right? Your
I
box
like
is
that.
not going to do that. And so it's just a steady, consistent growth. It's a strategy you can like with VU or anything else. The market could tank. You could be down for 6 months. Like it's just you're at the whims of the market. Where this is
Yeah.
just a different type of investment. So it's not better than those things, but it's a to me, it's probably one of the better cash type positions that I've seen if you just don't want to reduce
Yeah.
your principal.
Dylan, Nick and I have talked about like making some fund one way or another
Yeah.
for different people. So, Nick, let's say we made like a 35 to 40, like let's say 30s. You're in your 30s and we made a
Hmm.
fund. Like, this is our general plan. You can just take it for free or whatever. How much would be in box? Would you put anything in it? Like, would you say like 5% cash, 5% box, or 10% box, 0% cash?
Well, no, I think that in a fund you wouldn't need to because your people that are buying the fund are already tax protected. So
Okay,
there
sorry,
would be no
not
need to do
fund, investment plan. My apologies. Not a
Oh,
fund.
okay. Yeah, I would say for a 30-year-old,
Let's
I'd probably be
say
looking at some
a
more.
middle class 30-year-old who's making at least within his or her household 100K, but not like 500K. Let's say 100 to 200K. Maybe let's say
Sure.
70, let's say 75 to 150K. 30-year-old.
Yeah, I think the question would be like if I'm operating a fund, my job is to return value to shareholders, and I want to maximize that as much as possible.
Right.
A majority of that is going to be in some kind of VU or something similar, tracks the S&P 500 because they average on what 8 to 10% per year. So we want to at least get that. I would say probably no more than 10, maybe 15% of a cash position that we would hold just to maintain
Right.
without fear of losing that. I don't think I'd go anything more than probably 15, maybe 20%. If I was like really in this market right now, I might say 20% just
Or
because it's like
80%.
or 80%, you know what I mean? But like in a regular market where things are just steadily going up, maybe 10, 15%. I think as you get more concerned, I'd maybe go up a little bit
Yeah.
more, as high as 25%, but probably nothing more than that. It's just, what do you want to protect? That's really what you're
Sure.
doing with that fund.
Okay, and maybe this will bring us full circle for the day. You said like in a market where it's consistently going up. How is that not right now? How are we not at that point?
I think